you're going to wish, for these days back, because these are the days where you can work in a job at McDonald's and you can make whatever X dollars an hour and go buy Bitcoin. And one day, you'll look back and say, I was actually making the equivalent of $8,000 an hour at McDonald's, right? And if you actually are smart enough to work at McDonald's and buy Bitcoin right now, in 10 years, you're going to realize it was the most lucrative thing you did your entire life.
Welcome to Bitcoin Broadcast, featuring Michael Saylor, a leading voice in the Bitcoin arena. Today, we dive into Bitcoin's evolution, discussing its journey from an obscure digital currency to a major financial player. Michael Saylor will guide us through this transformation, highlighting key developments without revealing too much. Get ready for an insightful exploration of Bitcoin's impact on the financial world.
I think that from the years 2020 to 2024, that was the great transition of Bitcoin from being a retail asset in the crypto ecosystem, offshore, unregulated, poorly understood, the Wild West. And by the end of 2024, it will have emerged as an institutional asset in the mainstream financial ecosystems on Wall Street. Bitcoin's coming to Wall Street. And I think that coming out of 2024, Bitcoin is emerging as an institutional grade asset, and it's not going to be competing with the Bitcoin forks or other proof of work coins, or Sam Bankman-Fried's favorite yo-yo token. But it's, or apes or cats or, crazy crypto things. It won't be thought of as that. It's going to be competing against owning a block of real estate in London, or owning New York, or owning a ton of gold, or owning a building, or perhaps owning $1 billion of the S&P index, or owning 1 million shares of Apple stock.
Join us as Michael Saylor discusses Bitcoin's extraordinary growth and its acceptance in the financial industry. We'll explore how Bitcoin's value could skyrocket from billions to trillions, and how financial giants like Blackrock are now embracing it as a legitimate asset class. This segment provides a concise overview of Bitcoin's growing significance in the global market.
But if Bitcoin's going to grow up, right, Bitcoin's on a path to go from nothing to 500 billion to 10 trillion to 100 trillion dollars to 200 trillion. At some point, it should be 10, 20, 30% of all of the wealth in the world. If it's going to grow up like that, then it's inevitable that it had to be embraced and was going to be embraced by Wall Street. So if we consider the significance of BlackRock and the ETF, well, first of all, the real important point is there's broad-based consensus now that Bitcoin is an asset class. And that's a major revolution. If Fidelity and BlackRock and if 10 other ETF issuers all agree that Bitcoin is an asset class, right, it should be 10x to 100x bigger than it is right now. There's also broad-based agreement that sometime in the next year, a spot ETF will be approved. And that's also significant. I think the third significance is this is not BlackRock taking over Bitcoin. This is Bitcoin, being embraced by BlackRock, right? This is Bitcoin being embraced by Wall Street. Now, nobody on Wall Street, none of these ETFs, none of these leaders of these money managers have said, we just heard about Bitcoin, we're here to fix it. What they've said is, we heard about Bitcoin, it seems like everybody in the world wants it. And since we offer people gold and bonds and equity and other forms of investment options, we have a vacuum and we are lacking, and we won't be complete until we're offering a Bitcoin product. So I'm not concerned about it. I think it's I think the most important thing that's happened in the past 24 months is that Bitcoin has emerged as a legitimate institutional grade asset and as a legitimate ethical commodity. So what you have is a question, is Bitcoin a commodity or not? That has been resolved over the past 24 months via the endorsement of two heads of the SEC, Jay Clayton and Gary Gensler, the head of the CFTC, Boston Benham. It has been underscored by speeches by the head of the EU Central Bank, the head of the US Central Bank, the head of the Treasury, Janet Yellen. It's been implied, if not stated, in statements by the White House. It has been endorsed by leading Republican candidates like Ron DeSantis and leading Democratic candidates like Robert Kennedy. It has been endorsed and underscored by senators like Cynthia Lummis and Ted Cruz, and by Congress people like Tom Emmer, right, like Patrick McHenry. And it has been acknowledged by a nonstop parade of money managers. Last week, Mohammed El-Arian pointed out that it's not going away. It has been acknowledged by Larry Fink on CNBC, on Fox. It has been acknowledged by any number of journalists on CNBC, on Fox, on Bloomberg. And so the question is it illegitimate? Well, obviously not. It's an asset without an issuer. It's the world's first digital commodity and the greatest digital commodity. It's the only globally acknowledged digital commodity in the world. There is controversy about everything else. Bitcoin is the one non-controversial thing. So it is a legitimate asset. And is it being banned? Obviously not. The Chinese haven't banned it. It's deemed property in China. The Russians haven't banned it. It's property in Russia. The Americans haven't banned it. It's property in America. All of the controversy in our marketplace right now is surrounding crypto exchanges, the trading of unregistered securities, other tokens, and stable coins. And then the usage of these crypto tokens as a high-speed dollar substitute, a currency substitute. There's lots of controversy there. There will continue to be controversy. It is unclear how all that sorts itself out, except for the fact that there are two great conclusions you can come to over the past 24 months. Wall Street, the regulators, and the mainstream investment community endorses Bitcoin and appreciates Bitcoin. And everybody's skeptical of the rest of the crypto ecosystem, right? Bitcoin, yes. Crypto, not so sure, right? So that's where we are right now.
Michael Saylor presents a fascinating analogy. Investing a McDonald's salary in Bitcoin could be a life-changing decision. We explore how such an investment, in the context of Bitcoin's potential growth, might yield extraordinary returns. This segment highlights the unique investment opportunity Bitcoin presents in today's financial landscape, as envisioned by Saylor.
Everybody watched Michael Saylor's talk, and everybody on Wall Street agrees with him. And so they all bought Bitcoin. Tomorrow morning, you would wake up and Bitcoin would be $8 million a coin. And what would you think? You would think, dang, I should have bought more when I wish it didn't happen so fast. You don't want it to happen that fast. Right now, we're in this very ideal situation. We'll remember this time period fondly. We'll look back at this. Bitcoin trading at 26,000. We all know what's about to happen. We all know corporations are going to adopt it. Wall Street's going to adopt it. We know the ETFs are coming. We know the capital is coming. We know everyone's going to wake up and figure this out, but they don't have the ability to buy it yet. So you know the future, but it has not manifested itself in the price. You're going to wish, for these days back, because these are the days where you can work in a job at McDonald's and you can make whatever X dollars an hour and go buy Bitcoin. And one day, you'll look back and say, I was actually making the equivalent of $8,000 an hour at McDonald's, right? And you know, if you actually are smart enough to work at McDonald's and buy Bitcoin right now, in 10 years, you're going to realize it was the most lucrative thing you did your entire life. And when everybody else embraces these big three ideas, when the banks custody Bitcoin, when the spot ETF is here, when companies are using Bitcoin on their treasury, then that opportunity is lost to you. And instead of buying Bitcoin at 25,000, you're buying Bitcoin at 1,000,000. And here's the way you should think of it. You're taking a 40x pay cut. You see, whatever you're making right now is going to be worth 40x less. So take what you're making right now, multiply by 40. That's what you get paid, right, in fiat in order to use Bitcoin as a treasury asset and keep one foot in the fiat world, because you understand the future, but the rest of the world, 99% of the world, hasn't caught up with you. And I guess what I'm saying is, I think they all know. Right? I mean, a lot of them know. Some of them don't, but a lot of them know. But I sat with a guy's got $1 trillion in capital under management, and he couldn't buy the Bitcoin even if he wanted to. He couldn't, because he doesn't have the accounting systems, the on-ramps, the regulatory wrapper. So there are people out there that have more money than you that may actually perceive the same thing you perceive. They can't buy it yet. You should count yourself lucky if you actually have the ability to acquire it right now, right? Because you jumped through the hoops, you got KYC'd on a crypto exchange, because you've got a relationship, right? You have an advantage. The advantage is for a window of time. It will actually never be this good again, in my opinion.
In closing, Michael Saylor recaps our journey through Bitcoin's dynamic landscape. We revisited its potential for immense growth and the importance of early investment. Thank you for joining us and Michael Saylor on Bitcoin Broadcast. For more insightful content, remember to like, subscribe, and share. Stay tuned for more expert perspectives on the future of finance.